Well, here we are, ladies and gentlemen. It is Monday morning. Normally the markets are pumping. There's a lot of mixed news out there, and the bloodbath continues. Things continue to drop, fall. Are we at true capitulation levels? And that's always when it's darkest before the dawn, but we're going to dig into it. We're going to look at all the news, all the TA, and get the sentiment from this little circle of folks here. Good morning, Mr. Mando. You doing okay?
Yeah, I'm doing okay. Yeah, not the best morning, but yeah, still doing okay, surviving. Obviously, been a hairy week, hairy month to be honest. The last month in crypto, but yeah, still doing fine.
Seasonality has broken down. CTO, how are you, buddy?
I'm doing great. Interesting week, and yeah, it feels like every week there is some new disaster coming, and yeah, this was a big one.
And Marty, before we get into the agenda, how are you? Jet lagged?
I'm good. Just got off a plane. Everything's good. We're back to pre-election prices. So literally back to the November 4th prices. We're back to the end of October prices across the board in altcoins. Isn't that interesting?
Yeah, but not for Bitcoin.
That entire move was erased. But we'll get into it today.
Exactly. So we have a lot to talk about. We'll talk about some on-chain metrics for Bitcoin, as well as TA from CTO. We'll talk about the big hack, because that is extremely important to discuss, not because it happened, but is it a future attack vector? We'll get into it with our technology geniuses here as well. And some very bizarre reactions from what I refer to as OGs in the space. We'll get to that in a second regarding a rollback. And no, that isn't a price reduction at Walmart. That's something very different. And this triggers the whole debate, continued debate of self-custody versus exchanges versus ETFs. And the sentiment is changing there pretty radically. And it's mixed. And then US government Bitcoin bags some fun news there. VanEck, their forecast for the future, China money supply, and when the rest of the liquidity will come. Macro, how it sucks. SEC, ETH performance, yada yada. We'll look at some new emerging DeFi projects. Mando's going to fill us in there on Berachain, Sonic, and Maker that's been around since the beginning of time. Ray versus Pump, and why certain crypto names are just literally in the toilet. They can't catch a break. They keep on going down, lower lows, and that's the story. So let's kick off with Bitcoin TA. We always do. A lot of people like to tune in for that. Tell us where we are, and Bitcoin is one of those assets that's been holding up very well compared to the rest of the world. CTO, over to you.
Oh yeah, absolutely. So basically everything has dumped this month in total carnage except Bitcoin, almost. And actually nothing has happened here. This week, despite this biggest heist in history, and it's not Bitcoin, but it's a crypto. It's the same industry, but nothing has happened here. It's still the same range. We have support 90,800 and resistance 106. So we're still in the same range. It's completely non-eventful here. I think what's interesting is, of course, that Sailor keep buying. Price isn't going up. So who is selling? That's the big question that I'm thinking about here. But in terms of TA, nothing has happened despite the carnage. You're on mute, James.
That was a pretty quick one. No, I normally expected more, but I guess it's quiet. There is one other thing I do want to share. I have it somewhere. Well, I got my slides out of order. This one, I started digging into some on-chain data last week. I've been talking about Bitcoin on-chain and how it really has changed. It's become rather quiet over there. If you look at these numbers, you have daily transfer volume has fallen nearly 84% in a month. Number of active wallets fall nearly 80% in a month. And everything is kind of down with the exception of hash, which is up in a month. So does this mean anything? Is this a bearish sign? Is this a bullish sign? I know
maybe I should have elaborated on it a little bit more. What I'm trying to say here is that what's interesting, what has not happened. Bitcoin hasn't broken the range. It hasn't fallen out of the sky. It has held really stable.
Yep.
Despite all these negative news. So that is a sign of strength. And of course, at least one person is buying. We know that. And he's buying with big volume.
Yep.
So I think that's the takeaway here. Sometimes what doesn't happen is the key insight, and this has remained strong despite the carnage.
Exactly.
I would have thought that the hack of this magnitude that we got this Friday could have, dumped Bitcoin out of the sky, but it didn't.
Yeah. What's crazy too is, again, per the on-chain metrics, if this was another blockchain, I would be deeply concerned. But is this a reflection of the on-chain activity tanking? Is that because all the Bitcoin's moving to places like MicroStrategy and ETFs and maybe some sovereigns that are stacking? Or did people just take the last month off and say, I'm out, boom, because nothing is happening on chain? Mando, do you have any insights into this? Because these are stunning drops in activity.
Yeah. I mean, I think this probably points to the fact that retail has been very badly hurt over the last month, which kind of points to what you're saying as well. Like the people who are largely confused about this crypto sell-off and don't really see it are the institutions that have just been buying Bitcoin since the ETF came in. I think a lot of retail users that obviously were involved in Bitcoin, but probably involved in many other bits of crypto, which have been very badly hurt over the last month. I think that probably points to this. I do think we've lost a lot of people that came in the back end of last year, kind of already over the last month, and this probably points to that. It also probably points to the concept of like just owning Bitcoin and not touching it. Do you know what I mean? Like I think a lot of people over the last month decided that they'd had enough after Trump, and then there was a hyper rotation, and then that moved into some very aggressive rugs in the space. People were just like, I'm just going to own Bitcoin and not touch it for the rest of the cycle, and that probably points to this too.
That's an excellent point, because that was my conclusion yesterday as well, that this actually could be construed as a bullish sign because people are hodling. They're not swapping it around, they're not trading it, they're not perping it, they're not lending it out, whatever else, they are holding it. But at the same time, if things like Metcalfe's law hold, it's not a good sign. Marty, what are your thoughts on the lack of on-chain activity on Bitcoin? Does it matter, or is it good?
Yeah, I think it comes down to the nature of the holder. I mean, if we rewind back to the Trump election, we have to understand the majority of the Bitcoin holders now are institutions more than ever. And I don't think they move Bitcoin much. That's not what they use it for. It's a store of value, a reserve asset. I think Ethereum was used primarily as the majority liquid asset, moved around, and we know that it's just gone through probably the biggest FUD event of all time for Ethereum. There's a $1.4 billion of Ethereum sitting out there. No one knows what's going to happen. So the market is on edge. But yeah, as far as Bitcoin goes, I think its profile has changed from a store to a store of value, and store of values don't really move. They move very seldom. So that would explain that. I just think people should be mostly aware of where we are in the macro cycle. The expression "don't fight the Fed" has never been truer. We're literally at the depths of quantitative tightening right now. Everybody's broke. Everybody's in debt and has been for months in the Western world specifically. So, any talk of altcoin markets, etc., have been really spurred by, exchange manipulation and things like that. People don't have the money to enter into crypto like they used to. We're waiting for quantitative easing, and until we do, we will see an old rally. And I think Benjamin Cowen said it best. Don't expect an altcoin rally until the Fed prints money or there's a radical change, end of tightening, and tone in the Fed's language to express the liquidity event. Now, we know China has started, Japan has started, but the US, since the Donald Trump election, has been relatively static. So I think, the nature of the holder is what one needs to look at. And if you look at the nature of the Solana holder in retail, they came in for the memes and they left once the meme thing ended. If you look at Ethereum, similar situation. A lot of retail left Ethereum. They just sell. They're paper-handed, unlike Bitcoin, which is more of a strategic reserve.
And that's a very good point, Marty, about money, because this cycle is very different to 2020 when people were just airdropped cash money. Now the situation is completely different. And you see that as well in things like real estate markets. Real estate market in the US is destroyed. Absolutely. We're at 30-year lows
Yeah,
of
so
activity in real
20%.
estate.
Some areas have dropped 20% without it being in the news.
Yeah, now there's 10% of the population just left Washington D.C. as well. So
Yep, they're all out of work.
Overnight, literally overnight, this last week, the real estate in DC just tanked 10%. Especially the big multi-million dollar homes are tanking even more.
And James, I think it's important for us to say, though, I know it's hard for people to hear. This is the time. We are nearing the time when the opportunities exist. Capitulation is when you buy crypto, and it feels like we're on the dawn of full capitulation. I mean, I would say Solana has dropped 50% from 300. It's at 150. So that I would say is full capitulation. Sui has dropped from 5 to 3, somewhat full capitulation. Ethereum doesn't look like it's going back near 3,500. It's dawning on capitulation. Bitcoin is the outlier. It's the nature of the holder is different. There's tremendous buy walls around 90,000. Whether it gets under 92,000, we will see over time. But as far as altcoins go, I believe they have capitulated and they're preparing for some form of an altcoin season. When, we don't know. I would say in the middle of March, we're going to see macro changes in the winds and a move to quantitative easing. But until then, a lot of panic in the streets.
That's early, middle of March. Anyway, one of the things that we do have to discuss as well, before we get into the rest of the agenda, is it is sad when you see two things that have happened late this cycle. You get the top buyers that come in, and they are new to the space, like you hinted at, and then they get hammered. They think it's number go up only, and that's the importance of the bear market. Bear market is actually an opportunity. I want people to understand that again. Billions are made in the bear. When you come in to buy in the middle of the bull or late bull, you get hammered. The other thing that's sucked all the oxygen out of the room is memes. If memes didn't exist, I think certain alts would be doing a lot better. Thoughts on that, Mando? My little conspiracy theory.
Yeah, it's an interesting one because I think that's dominated the Solana sentiment, right? A lot of the left curve, like memes, alts, all that sort of stuff. And yet, for other chains, it's barely even a question. Chains off, like XRP, for example, like no one's talking about memes, and XRP is trading at like 2x Solana right now. ETH is also trading much higher without that sort of activity. So I don't know. It's difficult to know because it feels as though I think that Solana does need a little bit of a refresh in terms of culture. I think this like final big, the last week or two or maybe 3 of like rugs have really like cleansed the casino, so to speak.
Yep.
And although Solana has so much going for it, it does need to like maybe move away from that that sort of activity, because it can be used for so many different things. Just because it's, you know, the UI UX is better than any other blockchain, and the speed and the low fees just make it so good for a range of different use cases for crypto. But that is a narrative that seems to be growing. That for Solana to kind of emerge from this and be stronger again, it probably needs to mature away from some of the meme coin stuff. I'm not sure if I 100% believe in that. I do still think that speculation is one of the main use cases of crypto. There's no doubt about it. But it's obviously gotten very excessive. You know, like pump fun is it's a very divisive sort of thing on the chain for a lot of different people. Yes, it causes huge amounts of volume to go through Solana, but it's been at the expense of some cultural things. There was some stuff over the weekend where like a guy actually killed himself during a meme coin stream, and then a meme was created off the back of it, and everyone was just like, this has just gone too far. Like, I don't even know how. Well,
the story there, Mando, was the guy had a wife and kids, had lost his job, had no money, and had decided to kill himself and try and meme it for the sake of his family. I mean, absolute, just sad and terrible stories. Yeah,
right. I think that people are looking at stuff like that and saying this needs to change. Like Solana's culture went too far. It's still a great blockchain, but like the culture needs to move on from that sort of stuff. I think that's what we're seeing. I think honestly, I think Solana will come out of this very, very strong in the next few months. But for now, a lot of the users of the chain, I think, are gonna be refreshed over that period.
Yeah, that's a very sad note. But let's keep on moving. Let's talk about this. This is the big elephant in the room. Is this a new attack vector for Ethereum, the ByBit exploit? Let's try to tackle this whole topic in 5 minutes because it's been kicked to death. But what I want to get to is Ethereum under threat? And this takes us to cold wallets, like multi-sig cold wallets with billions in them. Have to be Fort Knox type security, gold Fort Knox. For that to be hacked is pretty stunning. And I must shout out to Ben, the head of ByBit. He has been very transparent, which I respect. But there's so much more. And there was another hack as well. Neobank Infini just lost 50 million. Shout out to Sanjay as well, who shared that as well. And again, it's ETH-based attack. We saw money being pulled off of ByBit. Shout out to Marty for this chart last night. And the craziest story of all, and I'm dumping a lot here because there's a lot to talk. 2 OGs, Adam Back, and of course, Samson Mao, believe Ethereum should roll back. And that was just the craziest thing I've ever heard, because that goes against the grain of what crypto should be, not rollbackable. If that ever happened, that would put a pin in ETH altogether. So I'm going to give this to CTO first, being the technologist in the room. Give us your interpretation of this hack. Is this an exposure? And then, Marty, you had a very profound post as well about 2 or 3 days ago, which I found very relevant as well, regarding technology and the fact that old technology, old languages have these vulnerabilities as well. But CTO, to you first, your view on the hack.
Yeah, so we don't know exactly how it happened, right? But it seems clear that there was some kind of blind signing. And I mean, I've done like, I don't know, 3-4 security videos where I said, like, don't do that even with your personal money. Don't sit there and connect your ledger to some site and then sign a hex blob, a bunch of characters where you don't know what you're doing. Don't do that. Have like a wallet where you can see on the hardware wallet if you're transferring money out and what will actually happen. Don't do blind signing. And it seems like they've done some kind of blind signing here. But I'm sure there will come a full report. But that is like, it kind of shows that complexity is the enemy here. These are smart people. It's their job. They were 8 signers. They all signed the same thing. We don't know exactly how it happened, how they infiltrated it, and hid the real transaction. But it's not. That's like the first disappointment, that complexity has gotten in the way to make the biggest heist ever, not just in crypto, but in like the history of the world. The second thing I was a little disappointed about is that there was nothing done, really. Like everyone says, we can't do anything. It's decentralized. Okay, so they're going to get away with it from what it looks like. And I feel that that's not good for the industry. Like, imagine all the critics of crypto, where it seemed like all hope was lost for the critics. Now they got this. Like, look, those guys funded North Korea's nuclear missile program with $1.4 billion, and they didn't do anything. It turned out it was impossible to stop it. I would have liked actually some action from the Ethereum team. You don't have to roll back the whole blockchain. It would be possible, technically possible, to block some addresses, at least freeze the money. And but I understand, it should be mutable, and the debate and the all those arguments. But I feel like I've thought about this question a long time already from the telecom days. I feel that there are situations where 100% almost of people do agree that we should do something. There's an ongoing kidnapping or something. Privacy on one side. 99% of people or 100% of people would agree that it is a good thing to be able to triangulate the location of the kidnapper, rescue the people. Situations like that, there is good to have some kind of oversight. And I feel that even in this situation, it would have been good to have that capability, because 99% of people would agree that it's not a good thing that North Korea can take everyone's Ethereum off the second biggest exchange and get away with it. that's not a good thing. That would have been good to have some kind of decentralized mechanism to freeze those 24 or 25 addresses shortly after the heist. Now I don't think it's possible. Now it's like disseminated into the whole crypto ecosystem. Now it can't be done. But that didn't happen, and I feel a little disappointed about that. It doesn't need to be rolled back the whole blockchain, but we should have some mechanism to freeze addresses, I think.
Interesting. So it's a catch-22 situation. Damned if you do, damned if you don't. But it should be done. Mando, your take.
Yeah, they're not going to roll back the chain. I mean, the reason why they refer to that is in the early days of ETH, they did roll it back because
2018.
the Ethereum DAO was hacked. I don't think they would ever do that again. And that was a very specific scenario about like the future of ETH at that time when it was very, very young. Now, I don't know. I don't think they can freeze addresses, but I know USDC, Circle, and Tether, they can freeze stables. So like they can freeze your if you have USDC or USDT in your wallet. And I think if you were to bridge to certain chains as well, they can kind of they can freeze addresses, or they can basically stop it during the bridging process. So it is going to be very, very difficult for North Korea to get out this 1.5 or 1.4 billion, because they're going to have to. They can't get out to stables, so they're going to have to get it out in ETH in some way.
Well, they're converting it to Bitcoin a little bit, trickling millions at a time.
Yeah, they'll do some of that. They'll obviously they'll try and get it to different assets, but that can be quite a dangerous process, particularly because you have to use certain protocols to do it. So we'll see what they manage to do. But obviously, like all these wallets are going to get tracked. They even bridged some to Solana, and they were like launching pump fund coins, and then this is how ridiculous pump fund has been. Like the North Koreans were launching pump fund coins and then using other wallets to buy to sell those coins and take out the Solana that way. So it was almost like a money laundering scheme through pump fund, which again, pump fund actually blocked for once. Yeah, this is going to be pretty crazy to see what they do over the next few months, because getting out of 1.4 billion, that is not easy. And I think they've already been blocked. Some of these funds have already been frozen. I think already in the 50 to 100 million range has already been blocked or locked in some sort of way. I think this is a very interesting scenario, right? Because it's a hack of a centralized exchange, but it's a hack of a centralized exchange using a self-custody wallet, right? They're using Safe, Gnosis Safe, which is like one of the safest ways to have self-custody. And seemingly the North Koreans, they suspect that they managed to get some form of malware or fake app onto each of these users' phones. So when they signed it on the phones, they thought they were signing one thing and they signed something else. They obviously pre-warned that they were going to make this movement. So when an exchange says they're going to move, $2 billion, they'll say, "Hey, we're going to do this tomorrow at this time." So the hackers were able to set it up at the exact time, and then it's called a musking attack, which is essentially like using like a fake ATM. Like it's one of those where you type in your PIN code and then you think you're seeing one thing and actually something very different is sort of happening. I thought there was a lot of dunking actually by a lot of other different communities. I think a lot of Adam Bax of Bitcoin Maxi. He's saying that facetiously, I think, and I think some of the Solana Maxis also got like criticized for their take on asking for a rollback of the chain. I don't know what the solution for this is. I don't know if you saw interestingly, Plan B, who's like one of the top like Bitcoin bulls for many, many years, said 2 weeks ago, "Hey, I'm moving all of my Bitcoin holdings to the ETF because I don't like self-custody and I don't want to keep it on a centralized exchange." And I actually think you're going to see a bit more of that. Like, I think people might prefer to hold the ETF over self-custody or centralized exchanges. And it's not that anything's perfect, right? Like, you might think, "No, I want self-custody." But this is a prime example of like, you can get hacked in DeFi, in CeFi, in self-custody, on exchanges, even through ETFs, right? Arguably,
exactly.
Like the ETFs,
they're exposed just the same as a centralized exchange. So what makes it any difference?
I know, but like, there's no.
There's no
you know what I
safe
mean?
place.
Like,
Let's go back to cash.
you got hacked here by putting your money on a centralized exchange, which maybe you had 2FA on your ByBit, and luckily, like that, they are making people whole. Like, if you had money on ByBit, you haven't actually lost anything. But let's say it was bigger, you got hacked, thinking you were safe on a centralized exchange, and then that centralized exchange got hacked via a DeFi exploit, essentially, or like a self-custody exploit. It's just crazy. I think any security expert will tell you, like, there's always going to be a route for an exploit. There's always going to be an attack vector. This is just one that proves that like nothing can really be safe, to be honest.
Yeah, Marty, tell us your take on programming languages and security and code and what you make of all this.
Thanks, James. Yeah, I have a lot of takes. First of all, I want to put it out there that I'm still not convinced that this was a hack. Okay. I've been around crypto long enough to know that hack is used for any time crypto is stolen, they will use the word hack. They'll use the word Lazarus. None of this is proven. It's all just speculation. I haven't seen any actual proof. But anyway, this is the classic reentrancy attack, people. This has been known on Solidity, the Ethereum programming language, since the beginning. I was working on Solidity in 2016, and we were aware of reentrancy attacks. Remember, Solidity is just C++. So what a reentrancy attack is, and literally 80% of exploits on Ethereum, on all blockchain, are from reentrancy attacks on Solidity, which means that the contract can be called whilst it's executing already. So what they did here, it's the classic hack. They ByBit uses Safe, which is another organization which does their multi-sig control, which runs a specific set of smart contracts. The Safe protocol UI said, do you want to sign for X amount? I think Manda said it was a couple of million. But actually, before that completed execution, they managed to change the value in the smart contract to 1.4 billion to confluate the situation and make the contract and the blockchain actually have consent for 1.4 million. That is reentrancy. In other words, newer languages don't have that. Rust, Move, etc. You can't do that. So this problem doesn't exist. But this is a problem on Solidity. It always has been. I mean, I can rattle through all the exploits, LendMe, Uniswap, the DAOs back in 2016. Yeah. It's all the Uniswap had a reentrancy attack in 2019. People don't know about it. This has just been going on for a long time, and I've been shouting about it for years, that Solidity is the biggest risk in crypto. And here we see it happen on the biggest scale ever, 1.4 billion. And it's not over yet. We saw another one today. And the problem now is that all the L2s are backed as well by multi-sigs. A lot of them use Safe as well. So this exact hack effect or vector can be used against all the L2s. That includes Base, that includes Wrap Bitcoin, Coinbase, BTC, all the ETFs. Remember, the ETFs are just backed by multi-sig wallets. This is a call that multi-sig wallets, you know, the way they're being used is not safe.
And because it's funny, but
humans initiate transactions, people. They may not think they're initiating the right transaction, but humans are initiating these transactions, not computers. Nothing has changed on the blockchain. Remember that. The software didn't change. All that changed was the ledger entries, the proportion of ownership by a wallet. Go ahead.
For years, I always joked, if anything has the term safe in it or fortress in it or moon in it or whatever, it's not. So watch for those words. And then the second thing.
They have come out and said they're going to make some changes to it, because I think that, like, MetaMask UI UX, remember, they used to always be criticized for like the amount of hacks you get on ETH. They never used to do warnings. And I think there's been a number of different companies that came in and basically were plugins that told you like basically what you were signing. I don't think Safe had done any of those sort of changes. So this is bad.
So let's do a quick.
And also, Safe sort of didn't take responsibility. I think that's also bad. A lot of people didn't take responsibility, other than Ben from ByBit. I think he handled it well. But at the end of the day, you know, the effect is the same. $1.4 billion of ETH, arguably the most liquid asset gets into the marketplace. No one knows the uncertainty and doubt. Perfect opportunity to flush the market as they did. You can see they ran at 94, 153 SUI, and I think they'll try and attack 2,500 Ethereum. And that's just the way it is. They'll use any possible scenario, and they got the perfect storm. I mean, this hack and the Libra thing were the most perfect FUD narratives of all time. So there you go. Retail will bail. They'll think they'll buy lower, and they'll probably buy higher.
But interestingly, the Ethereum prices held up pretty well considering this. And this takes us
to buy Ethereum. ByBit had to buy Ethereum. Remember?
Yeah. But the crazy thing is now, at least the retail crypto person, lady or gentleman or whatever else, they're now confused. We've seen a big change since the ETFs launched around this debate, long-standing debate. Self-custody, not your keys, not your coins, was always the mantra for crypto and Bitcoin. And by my calculations, 5 million Bitcoin have been lost in the last 14 plus years. Now, self-custody, I'll do a very quick round the table with everybody. Self-custody versus exchanges versus ETFs, or just perp memes online. What's the option here? Mando, you first.
I use Safe, if I'm honest. I use squads on Solana. I use multi-sigs, but and we use it for some of the businesses that we use too. I have to say after this though that we had like a call, and I've reassessed like some of the stuff I need to do. I think thinking that you're just safe with that sort of technology, it's probably the safest form of self-custody in some ways. But yeah, you can have attacks like this still.
So your calculus has changed completely. Marty, self-custody, exchanges, ETFs.
For me, self-custody is, I mean, at the end of the day, like we said, exchanges and ETFs use self-custody within their custodian, right? So it's all actually the same thing. At the end of the day, I think that there's newer technologies like Keystone Wallet, which have there's MPC, there's new types of multi-sig methodologies, better practice. But at the end of the day, don't do blind signing. I mean, ByBit did blind signing. They just approved transactions blindly without picking up the phone and saying, why are we doing this? Are we sure we want to do this? Where did this originate from? Why are we sending millions of dollars? Right, at the end of the day, I think that's where the problem starts. You need to respect every click in crypto. You can't just blindly sign everything. You need to make 100% sure what you're doing, double check, triple check, and trust your capital. And I think they made the fatal mistake. They pushed consent without really double checking. And the crypto industry pays the consequences. Now, exchanges are the same thing. They store all of their money in multi-sigs, very old technology. I mean, look at Wrap Bitcoin. Wrap Bitcoin has over, I think, 100 different multi-sig strategies with BitGo Global to store their underlying capital. That could very easily be exploited. That's 9 billion or whatever. And then the ETFs are the same, and we've got a couple of custodians holding all of the underlying crypto for the ETF clients. Same thing could happen. So I think there's always a good side to this stuff. Obviously, it's bad that $1.4 billion, gets moved into the wrong hands. But the good side is hopefully people will look once again at multi-sig, not just assume it's safe, and readdress best practices into the industry. Everybody will upgrade their security profiles, and everything will get a little bit more safer, hopefully, from this kind of activity. Crypto is so new, it's that kind of thing. It takes a big catastrophe for people to change and update their methodologies and their the underlying ethos around safety. But at the end of the day, go ahead.
So far, multi-sig is still safe, cold storage is still safe. CTO, we saw the big move from Plan B to ETFs, and many believe that's because of the Ledger kidnapping in France. He's not too far from France, and Plan B is one of those very paranoid people. He never shows his face in public, doesn't attend public events, stuff like that. Maybe Mr. Keyframe says here, maybe he was paranoid of that attack, and that caused his move. And of course, in the Netherlands, you can do that tax-free. What's your take? Self-custody, exchanges, ETFs?
Yeah, so I always say, like, people always ask, what did you do? What did you do? And so on. And the thing is that I'm not really representative here because that's been a big consideration for me for many years. So I have almost only ETFs or like the products that we had in Europe before the ETFs, which is kind of an ETP or price tracker certificate, precisely for that reason. And so that's me. But I think that most people are not really interested in that. They're interested in what they should do. And of course, for most people here, that's not really a consideration. They're more private. So then I think I still think centralized exchanges have a role to play, because for many people, I think a bigger risk is to kind of do some handling error. So they kind of lose the crypto. Suddenly, they do a mistake. They know that people who know that, difficulty, they have to reset the passwords, those kind of things. Okay, then maybe self-custody isn't the best idea, because there is no one to call if you do a mistake. Yeah. And just look, ByBit can do a mistake. The CEO of ByBit can do a mistake. Then everyone can do a mistake. So I think that's the thing. But centralized exchanges are not risk-free either. Now it seems like, according to ByBit, they can make the users whole. But what if it had been 2 wallets then? Okay, then they would have been bankrupt, probably. Then the whole thing plays out again. And the takeaway instead is that the risk is fairly big. The risk in crypto is pretty big. That's why I was never fond of the yield farming or something where you can lock up your crypto and you get 4%, 5%. I always felt that no, the risk of something going catastrophically wrong is bigger than 5%. So the risk reward of having like a secure 5, 6, 7, maybe 8, 9% is still negative. Maybe even 10% return is a negative risk reward, because something is going to go catastrophically wrong at least once every 10 years. That will affect you. Look at all the exchanges that have gone bankrupt. All these things. This was like an inch away from that happening again. And that's the takeaway. Like the return of the money you have in crypto, it has to be 20, 30, 40, 50%. It cannot be 5%. Then you're playing a losing game. That is the takeaway. And then for each person, depending on the risk profile, the takeaway is different. For me, maybe I have to have mostly in ETF type solutions. People who lose their passwords, maybe they should have the money on the exchange. People who are good with that stuff, probably self-custody done right is a better idea. And then don't do blind signing on your ledger. You need to have 2 ledgers or 2 devices, one where you store money, you only transfer coins in and out, so you can see on the device what you're doing, and one which you connect to DEXs and could get wiped any day. That's my suggestion.
Well, speaking of hacks, and this dovetails into, Marty, kind of your belief that maybe it's not a hack, it's all a ploy to get access to a lot of money. And there are now recent rumors that have emerged that the US government might be struggling to keep track or know even where their seized Bitcoin holdings are. And there's lots of new allegations of mismanagement. They have old tech, old systems. Somebody said earlier they probably keep the information on a Word document, which can be easily hacked by others. Now, this is kind of crazy. What if this is actually true? And we know the Fort Knox audit, which hasn't been looked at in my lifetime, is going to be looked at too. So what happens if we find out there's no gold in Fort Knox? The US government doesn't have 200,000 Bitcoin. It's gone. Like, what type of trust will there be? Trust is everything that we have. What happens if that disappears? Amanda, I see you nodding your head there.
This is one of the most wild stories that I've seen over the last week. Somehow the $6 billion that the US has in Bitcoin they might have lost the keys to it. It just screams of government inefficiency, right? Yeah. Oh yeah, this wasn't my problem. Somebody else has it, or the person who left, he was the one in charge of it, and I'm just taking over. This would just be wild if they don't know where the wallets are.
Yeah. I've heard rumors that one of the people that held a spreadsheet of all of the keys was fired by Doge.
Well, he's got his retirement plan set up now then, probably. Big bag of Bitcoin. But it's the world. You can't make this up. So let's keep the train moving. Let's talk about the big buyer. CTO, you mentioned one person buying a truckload. They just bought $2 billion worth. and that was just about 20,300 Bitcoin. They are now at 499,096 Bitcoin. This is MicroStrategy, now called Strategy. Their NAV premium keeps on falling. Proxies aren't doing well, but that's a reflection of everybody's. This is capitulation sign when you have year-long low NAV premiums. It's everybody's throwing in the towel and just getting out, or they need to pay taxes, or they need to pay their mortgage. There is no money in the system. People are smashed. But what's interesting about this, though, is because and I look at the simple metrics, okay, long-term holders looks like they're pretty done selling at 70% of what they typically sell during a cycle. But you've got whales buying. I think somebody said Bitfinex is buying 375 Bitcoin a day at the current rate. There are ETFs and MicroStrategy buying 4 times the daily mined amount of Bitcoin over the last year plus. And then you have Sailor jumping in and buying 20,000 Bitcoin in a week. I mean, at some stage, obviously they're keeping things afloat, but they know something big is happening. And we know adoption amongst pension funds and sovereigns and SBRs is on the cusp. Yeah, it'll be hard to pass some of those things, but this is pretty big buy. Thoughts?
I just think that this is something that you really do realize after a few years being here. Bitcoin is not crypto, all right?
Yeah.
Like maybe Bitcoin is that might annoy Bitcoin maxis because it kind of devalues it, but it's not. I'm saying it's just it's completely its own plane. If you're paying attention to Bitcoin and think it's going to affect anything outside of Bitcoin, you can get absolutely destroyed, right? Like if you're looking for trade altcoins, you should be focusing on the coins, the 5 below Bitcoin, and seeing where they trade. Bitcoin has its own buyer base. We've already spoken about how retail is being replaced by government institutions and by longer term holders. They're not getting affected by the rest of the whole market getting wrecked in any sort of way. It's a completely different buyer base, a completely different reason for owning it even. Like people are owning it because they think it's the hardest asset out there. It's like a new form of digital gold. That's that's like saying I want to own the S&P because I own gold. Do you know what I mean? Like the reason for owning those two assets is very, very different. Very, very different. So I think Bitcoin can continue to do very well. Gold is trading at or close to all-time highs. The VIX just broke above 20. Like people still have that, like they want to own the insurance asset, and Bitcoin, albeit it can have a correlation of one when stuff goes really, really bad, generally is seen as it's just seen as a safer asset. So I think it will continue to see all these different buyers. Like last week we had Abu Dhabi coming in and buying what, a few $100 million. They're going to buy a few billion, I reckon.
Yeah.
All the states are going to say yes. It's just a very different asset.
And then Sailor he was at a thing called CPAC, which is a conservative conference, and he had all his speeches are great. He's a wonderful talker and Bitcoin spokesperson. But he said 2 things that were profound. One, it's a $2 trillion asset today. In fact, Bitcoin's just shy of 2 trillion, but it'll be worth 200 trillion in 20 years. Okay, so he believes Bitcoin will do 100x in 20 years, which is stunning. The other thing he said is the US government urgently needs to buy 20% of the supply because that will help the US become the strongest currency, the strongest economy, etc., and it'll force other economies do the same type of thing. And this is the game theory of Bitcoin, which makes it so special, which is one of the reasons I'm obsessed with it. Marty, any thoughts on the CPAC from Sailor? Did you see it? Or were you with him in DC?
No, I mean, I think the interesting thing now is if you look at the top holders of Bitcoin, you know, obviously Coinbase 885,000, Binance at 629,000, and BlackRock at 584,000. Those are all customer funds. You know, people make the differentiation very badly. Those companies don't own that Bitcoin. They own it on behalf of their funds, of their customers. The only company that actually owns it in their corporate reserves is MicroStrategy. They own now 500,000, 499,096. So they're slowly, by far, the largest holder of Bitcoin. And I don't think their strategy is finished. I think Michael Saylor sees these opportunities better than anybody, and I don't think their master plan is kicked into gear yet. So, but another point I think that's important to make is that under the Trump administration, we've now got the most crypto savvy government ever in positions, and they've just created a crypto task force, which is going to be very aggressive. So I think that any one of these major exchanges that's been, doing shady business is going to be put under the spotlight. And specifically as we get to state and sovereign strategic fund talk, they're not going to allow the US to invest in a strategic asset that's being manipulated offshore. And I think we're going to see a lot of this is a reaction to that, and I think we're going to see more as this goes along. But I think MicroStrategy is slowly and definitely solidifying its role as the safest way to hold Bitcoin.
And Marty, refresh us on Wintermute and Binance.
Well, I mean, I track this very clearly. I put up a post today. You can see almost 1-to-1 how Binance has sold off all of their reserve assets to lower the prices, which is what they typically do. In 2017, they did the same thing, causing a massive V-shaped flush, and then bought it all back at low and ran the price up to new all-time highs. So that could be the strategy they're doing again. But yeah, they use market makers outside of their exchange to sell and buy assets on their exchange so they don't have to do it themselves. That's how they manipulate the price. And they've been doing that just like rockets. But it pretty much selling every reserve they have, lowering the price, flushing out all the leverage. The question now is, when will they recover the price? And, it could be any day now. But I think that with this combination of the new crypto task force stepping in now, cleaning up shop, preparing, making it more hygienic crypto, because there's much bigger buyers coming in, much more strategic buyers. You're going to see a lot of these centralized exchanges moving a lot of value around, a lot of hacks, a lot of exploits, a lot of narratives as they try and figure out, try and heist as much of this value as they can before the regulators come in. But at the end of the day, I think, as we move towards the end of quantitative tightening, which we now know we have a date, March 11th is pretty much the end of the recovery stage of the 2008 crash. We'll move into sort of a blackout stage, and then quantitative easing will be announced. And, that's going to be the kickoff of a bull run. We haven't really seen a bull run. All we had was a Donald Trump victory and an associated pump. And yes, it was a magnificent pump. And everybody, including myself, thought it wouldn't recover all the way back. But unfortunately, that's not the way the market works.
Yeah,
all classic. The gains from the Donald Trump victory have been taken back. And that's where we sit today.
Yeah, classic buy the rumor, sell the news. Everybody is expecting an SBR day one. Of course, it takes a long time to put that in place. But the reason why it's possible for a strategic business or Bitcoin reserve to happen is because of debt. And a lot of people have spoken about this. RFK, Saylor, VanEck. Now, if the US was to deploy into Bitcoin, have a big chunk, maybe 5%, 10%, 20% of the supply, they could solve the debt crisis of the United States overnight, which would implode every other currency on the planet, because at least the hardness of Bitcoin would keep the US dollar afloat and stop debasement. So that's a fascinating theory. We've kicked that to death a few times. But on the macro, people are asking, why is the market so weak? Let's switch gears to macro for a second, because this is important. There's a lot of talk about China's money supply surge. We'll debunk that in a second. But then geopolitical tensions, crypto markets, debt supply, real estate crashing, unemployment, AI, inflation, money print. I mean, the macro headwinds are bad right now, really bad. You see what's happening in Europe. The outlook there is pretty bad too. The economic engines are being murdered by the Chinese and the Koreans, etc. So, CTO, any thoughts on the macro, where we are right now today?
The thing is, if I can share some charts,
yep,
it actually doesn't look so bad. I mean,
S&P is at all-time high, right?
Yeah. Yeah, stock market's doing great, bumping up here against the resistance, hitting all-time highs. We have gold hitting all-time high. Dixie has retraced a lot. Yields, if we're lucky, we're getting a top pattern here in the yields. And that's looking pretty good. Everything is looking good. And I mean, Bitcoin isn't looking bad either. This is like a positive chart. We just got the pump a little bit earlier. Just hasn't broken out yet. So
I agree.
Most assets follow each other to some extent. And then we debate, is Bitcoin risk on or risk off? Turns out it doesn't really matter this period because both gold and stocks have, the chart looks the same. It's pumped the same. So regardless, Bitcoin should also pump, which it has done, but it just pumped earlier. And I still think, this could turn into a flag that breaks on the upside, but we don't know that yet. Perhaps it will consolidate more, perhaps it will back up a little bit and then reload. But this is still looking pretty good. But if we start looking at the altcoins, it's a completely different story. I don't know if you want to go for that now, but I think the macro kind of looks good here.
But, the other thing, you mentioned gold breaking new all-time highs again. That's actually historically a danger sign because that means people are going risk off hard. And S&P 500 all-time highs is also a danger sign. Multiples, danger sign. This is what you don't see in the underlying chart. So there's some weird stuff going on. People understand the world is a circle of debt. If it was an enterprise, it would be delisted and bankrupt. But that's just the whole planet, the way central banks operate under the modern monetary theory. I don't know. There's a lot of people extremely concerned about the macro, including myself. The charts say things are good, but the underlying is a bit of a house of cards in some regards. Mando, any thoughts on this?
Macro feels a little bit strange to me right now because I would agree with what you said there, CTO, in that I've seen in the last week, NASDAQ hit all-time high, gold hit all-time high, or the S&P hit all-time high, sorry. China stocks are at a 3-year high. European stocks hit an all-time high. And yet there's a lot of like trepidation. Steve Cohen who's a very well-known hedge fund manager, went on and spoke last week and said, look, I think we're looking a little bit stretched. I'd be unsurprised if we saw a sell-off here. And then the VIX today spiked above 20, kind of out of nowhere, right? Like after a period of it being doing very, very little. I think there is like nervousness. There's this sort of sign like people are expecting some form of sell-off to come, and they're not really too sure where it is. That's my general sense of like macro thoughts right now. A lot of the PE ratio, like the forward PE ratio plus looks stretched. Plus you have people like Berkshire Hathaway owning came out on the weekend, they own even more cash now, like $350 billion worth of cash. Like, I don't know how to describe it, but there is this sort of feeling that we are probably overdue a bit of a dip. And like people are waiting to see what that is. This breakdown of kind of US-European relations over Ukraine, like maybe it's that. Maybe that emboldens China to do something on Taiwan. Maybe, like you said, James, like one of the big worries that seems to be like not completely falling out of bed, but is the US housing market is looking slightly stressed. Like US home builders are getting smashed right now, and you're starting to see stress there in terms of number of cash buyers, the average asking price. So like maybe people get a little bit worried about that sort of stuff. Maybe people get worried about a breakdown in one of these like government debt spirals. I don't know what it is, but there's just something in the air that just feels like people are expecting some form of a sell-off. I don't think it'll be hugely like a huge one, but it's just the feeling I got. Like even on Friday when stocks are selling off and they sell down 2%, people were talking about a random Daily Mail article about a new COVID strain. It just felt like people are looking for reasons for us to dip. That's just kind of what I've been seeing.
Yeah, which could be a good counter indicator as well. Let's talk about this one too, because this got the headlines, Marty, for you and others. China M1 money supply shot up, but the truth is they did a recategorization of their money supply, just like the US did, where they started including things like balances on WeChat and Alipay in the M1 money supply as well. The exact same thing happened to the US money supply. Any thoughts on this, Marty? So it's not the extreme liquidity pump that we thought it was. It's actually a recategorization of money.
Yeah, I just found it to be quite staggering. I mean, the effects of that are quite big. I mean, a recategorization of a nation state's money supply is quite a big deal. But
it
quite
shows you how much is
overnight.
on WeChat. Yeah.
I mean, it's quite amazing how they do that without considering the implications. I want to just touch back on what CTO says. I agree with him. I mean, gold is at an all-time high. Stock market's at an all-time high. Bitcoin's almost at an all-time high. The economy is bad, but asset prices have never been higher. I mean, so the interesting thing is exactly what Mando just said. Everyone is sort of expecting a pullback based on economic factors and macro factors. And, I think we're at that time now where any issue, any problem, any news will be over-exaggerated and exploited. And, it just feels like that's the case. People posting screenshots with no actual evidence on chain, everyone believing it. We're going through that stage. We're witch hunting. We're looking for reasons why, there should be a massive pullback. Whether people do that because they want lower entries or whether they really are anti the technology or the market, I don't know. But we're going through that stage and people need to block out that stuff and understand that, we're at all-time highs. Yes, the altcoins come up and down because there's just tremendous leverage in those systems, especially in DeFi. And, that's always going to happen. They're always going to pull back 50% and they're going to use any narrative. But we're creating the narratives, on crypto Twitter and the news. We create these narratives. Like, there'll be one transaction and everyone will have 100 reasons why. It's the end of the world. It's the end of the world. It's the end of the world. That just, market makers prey on that stuff. And we've seen them execute it to perfection. But to CTO's point, I mean, look, stock market just broke all-time high. Gold just broke all-time high. Everything's at all-time highs. I don't know what people are complaining about. The only issue is the job market is weak. The housing market is down 20% in some areas. Robotics and AI are taking away jobs. Government jobs are falling thousands a day. And the government has to roll over a shit ton of, $7 trillion to $9 trillion of interest of debt. These are the real factors. So
this is the real problem. Yeah, exactly.
Easing has to come. It can't continue this way. Rates have to come down so they can refinance, and money has to be printed because there's no repo, there's no money in the banks. The banks are broke. So, I don't know. I always said an entrepreneurial president would come along. Did I think it would be Donald Trump? Maybe. Maybe he is the entrepreneurial president that says, screw it. We're going to clean shop, foreclose on our debt. We're not printing money again. And, what comes, Great Depression, you got to deal with it to get to the other side. I don't know. I just don't see that happening. I feel like there'll be one more run on the money printer. And, it's just a matter of time. Usually it's around the middle of March. We start hearing sentiment changes from the Fed. And, into April, they start to shift to quantitative easing. So
what's interesting about that is Doge actually makes that QE less impactful because they're finding money that can be put into the system too, which is an interesting separate angle. Got a couple more topics before I move on. Links below for Mando and his newsletter and Marty and CTO on his channel and all that stuff is all down there. And we're all on each other's channels, so you can see us everywhere. We had a huge regulatory shift in the past 30 days. Dropping enforcement actions, Brian Armstrong from Coinbase was over the moon. The activist SEC is gone. They've formed a new fraud unit. The market didn't react in terms of price. You'd think they would now that the big bad wolf is gone. In fact, some people say, oh, the big bad wolf is gone, and then all these rug pulls are happening. What's your take on this, Mando? Give us your regulatory perspective. SEC shift, good, bad, indifferent?
I thought this was a really, really good shift. Because actually what they also came out during the same week and they announced a crime division, like a fraud prevention division. So what they're really saying is, hey, we're gonna stop going against the good actors, the people that have tried to play by the rules, i.e. Coinbase, Uniswap, the other main ones, Robinhood, some of the other major exchanges. And what we're really going to focus on is the people performing like large scale fraud, because they got really criticized for like missing FTX, but at the same time allowing these other people to get through. So Yeah, look, I think this was a very good move. I think what they have said though largely is they're gonna like meme coins are collectibles. You want to lose money on them, you can lose money on them. We're not going to try and protect people on that. So don't think that they'll protect you against meme coins, but they will probably try and protect you against an exchange going down again or a big DeFi protocol potentially rugging you or something like that.
Excellent. Good thoughts. We won't spend too much time on regulation because people are bored with it, but we will talk about the emerging DeFi projects, Sonic, Berachain, Maker. And again, I'm going to put you on the spot briefly, Mando, on this one, and then circle back to Marty and CTO what they think. I've been watching Maker for years and years and years. It's a real OG player in the space. But then Sonic is new and Berachain is new with unique tokenomics. Tell us what you think about these and what the audience should know.
Yeah, like Sonic and Berachain are probably the two more interesting ones. So like if you're looking at places where money has flown from Solana over the last week, Sonic and Berachain come up consistently as the places where that has flown to. They're both EVM, so they're both Ethereum virtual machine. You use like MetaMask generally on them, although some of them allow for Phantom. But they are 10K TPS, or at least Phantom is. So it's very quick. It's the quickest of the EVM chains right now. That Sonic is the new name for Phantom, which was a 2021 chain, which I'm sure a bunch of you have heard of. Andre Cronje was the creator of it. He was like a DeFi OG, and they have basically rebuilt the chain with new tech. They got new investors. They got 200 million of investment, and they're doing this big incentive program, which is lasting until I think June or July. So a ton of DeFi is moving over there right now, and it's more like degen DeFi. So it's the sort of stuff people were doing in 2021. Similarly for Berachain, a bunch of different protocols on there are doing different incentives. And their TVL, I think, just crossed base and Arbitrum. So you're starting to see big amounts of money move there at the moment. Berachain and Sonic, I think they're relatively interesting. It seems to be that and the reason why I'm mentioning this is because this seems to be a bit of the new meta. Right, we've moved on from meme coins. We're going to go and do some crazy DeFi stuff, right? And that's kind of got the old guard involved as well. A lot of the 2021 crowd are involved. So, and these aren't huge in terms of in terms of FDVs. So Sonic Phantom, I think it's about 2.7 billion FDV right now, which isn't crazy, and it's fully unlocked, because it's obviously from 2021. Berachain is a newer coin, of which I think the FDV is slightly higher. It's 4.5, but the current market caps is between 1 and 2. So we've seen this with some of these L1s. They take attention. We saw it with Sui. Sui's 30-ish billion FTV, right? You're seeing huge growth in TVL. So Sonic, for example, was 550K of TVL last month. It's now 700 million. So it's up 700 million of TVL in a month. But in perspective, Sui is 1.6 billion. So you can see a run up in these sort of L1 coins on increased activity, and arguably some new innovative tech there. It's a faster chain, but it's just something to pay attention to. It's something that I've seen over the last week. People are getting tired of memes. They're getting tired of some of the other altcoin metas, and they've moved on to this sort of stuff. And I think it could last for a little bit. I'd be unsurprised if these L1s capture a bit more attention for a while.
I'm looking at the Sonic data right now. They have 15,000 daily users. Solana has 5 million. Their fees are $600 a day. Solana's nearly 2 million. The metrics are far less than Cardano, believe it or not, right now. Which Cardano has double the users, that's the Sonic one. The Berachain I haven't looked into at all, but will. Interest in the tokenomics. Marty, any thoughts on this new degen DeFi? Is it where people need to place themselves, or is it just a flash in the pan?
No, in my opinion, this is all junk, honestly. Sonic is just Phantom. That all came out of Phantom's just notoriously been a piece of junk, as far as I'm concerned, and always will be. I think people will just chase the next wave and lose all their money, as they always do. The only 3 technologies that I really think are pertinent. I'm a technology investor, guys. The charts are intriguing, but the technology at the end of the day will win. The only intriguing things to me are obviously Fired Answer, which is just about to come down, which might be, one of the greatest open source softwares ever made. Double Zero, which is just a phenomenal new project coming out to do a high-speed privatized internet for high-speed decentralized blockchain transactions, which I think is built to support, the mainstream markets going onto blockchain.
But there's no double zero token. Beware, everybody. There's no double zero token, correct?
There's no token. There's no Fired Answer token. Obviously, it's Solana. There's no double zero token yet. They've hinted at maybe, but nothing yet. And then the third one is Walrus, which is on Sui. Sui's decentralized storage. I've used it personally. It's like Dropbox, a decentralized version. It's fast. It's unbelievable. And that's got a wall token. There was a pre-release NFT that came out to lock wall tokens before the public sale. Look out for that, WAL. That's just an amazing piece of software. And then I think more important things are like Figure Markets came out with a yield-producing stablecoin, which is registered by the SEC, the first and only stablecoin actually registered as a vehicle by the SEC. You should look into that. It's on Ethereum, Solana. It's on all the major networks. Figure Markets, stablecoin. Those to me are the interesting things. All these other chains, I mean, it's kind of a joke even talking about it, like Berachain. Berachain started as an NFT project called Bong Bears in 2021. These are all just jokes. They're all just copies of the same EVM code and renamed and fiddled around. I wouldn't invest. The only other layer one I'm watching that I have made an early investment into is a layer one called Taraxa. People should look into that. Taraxa basically rewrote Ethereum from scratch, which I take my hats off. I think Ethereum should have done that years ago instead of just making L2s. So look at Taraxa. The coin is TARA.
Sounds like Tourette's.
That does, right? TARAXA, Taraxa coin. That's very intriguing technology. They've rewritten Ethereum with a lot of the new Gen 3 methodologies. But all these other chains, they come and go. And when people say DeFi, I mean, DeFi is loaning, borrowing, yield generating, trading, liquidity providing. Meme coins are just a liveness test. They were just the first examples of ledgers where people would lend, trade, etc. And we all know everything was going fine until Libra, which, insiders destroyed Libra, and insiders will destroy any meme coin on any chain. So just stay away from meme coins right now. As I said, the cycle starts. That's when you make the money. The cycle matures, and then the cycle ends. Do not get anywhere near it. And everyone made the same mistake. They all entered meme coins at the end of the cycle and lost their money. Don't blame the chain. Don't change the software. Go ahead.
CJ, super interesting juxtaposition between Mando and Marty. Where do you lie on DeFi degen time?
I would love to see a kind of return to utility, but perhaps it's just wishful thinking. I will never be the best meme coin trader. I'm not interested in sitting 24 hours a day and follow the sentiment this hour and so on. I'll never be the best at that. But I'm good at understanding technology. So I hope that we see that the pendulum swings back a little bit to technology with merit, which has kind of taken a back seat for the past season. So I hope that comes back. And there's a lot to say. I'm not that excited about Phantom, Sonic, and the others either. I know time is running out, but I have one question that I really want to hear your thoughts about. If I can show the screen for 1 second.
Yeah.
Here's Radium, which I feel is a quality project on Solana, providing the automatic market making solutions. And it kind of fell out of the range and had a big down candle, almost 30% today, on the news that Pump.fun are going to make their own market making solution, possibly. They have at least a dev delta on that. What's your take, guys? Does it matter, or is this an opportunity? Because that's a project that I appreciate.
Yeah, so Ray is, I think, about my third biggest Sol alt position because they make so much money. And 90% of all the DEX volume on Solana is on Radium, and the rest fight over the last 10%. And they are putting half of their fees that they make, and they make a ton of fees, into buybacks. So this one has a lot of things going for it. To get adoption in this space, like Radium's been around for nearly 4 years now, as far as I remember. You could correct me on that. They are OG. They are lean, mean. They are rapid. If you need to do something DEX-wise online, Radium or Jupiter are the place to go, or on the Phantom Wallet. That's just my quick thought. Mando, I see you nodding over there.
Yeah, so I think it's I mean, Pump Fund, as we just spoke about, is being a bit toxic at the moment. People have not really liked these new meme coins. This does account for I think it's about depending on the week, but like 10 to 30% of Radium's volumes have come from these sort of Pump Fund migrations. It's not the whole of their business, but I think it was part of their growth story. You know, like the idea that they would dominate a lot of the meme coins going forward. I do think this stock's oversold. We'll only ever know this like when the Pump Fund AMM actually goes live, which I think they're maybe testing, but it's not fully done just yet. But yeah, like a token like this, which has been making so much money over the last year, and is buying back. I think it's 100% actually, with 12% of the fees. Yeah, that's a decent revenue story. So I wouldn't say this is a terrible story for Radium yet. It's been tough though, right? Like Solana, you can either get involved in the memes, you can get involved in the stories, like the different sectors, you can get involved in the memes, you can get involved in some of the shovel plays like Jupiter and Radium, or you can get involved in the L1. There's been nowhere to hide on Solana for the last month, right? Nowhere to hide. There's been nothing on there which has been like, oh, this has been the bright spot. Jupiter just 2 weeks ago or last week was getting caught up in the whole Libra thing because they're close with Meteora, and Radium avoided that. And now Pump Fund's come out and said this. It's just been a really, really tough time to be involved in anything on Solana for the last month.
And it seems like a lot of people are waiting for this, the ETF, and the rumors are swirling, and there's more filings, and the SEC is friendly. So that could happen, and that could be the last big boost. I do have one final topic, because we always have to talk about AI. We were going to talk about a big biotech play, but that'll come next week. That's fascinating what can actually be done. But I do want to talk about this as big breaking news, and it shows you how fast things change. All of a sudden, Microsoft is canceling huge data center contracts. They had a huge amount of CapEx planned, nearly $100 billion for 2025. They are backtracking on that. Thoughts? Immediately, what I anticipated was Grok 3 would smash ChatGPT. It did. Don't fade Elon Musk. Love him or hate him. He's very good at what he does. Now, all of a sudden, literally, Grok 3 is going to eat ChatGPT lunch. Microsoft are very clever. They see this and they're pulling back on their investments. Anybody want to take this one out of left field?
Yeah, I saw this morning as well. Like, I think there's been a lot of drive for these big Magnificent Seven companies to justify their huge capex spend on AI. And after DeepSeek came out, a lot of that was being questioned. We were talking about that like a month ago. This is the first signal that we've had that maybe they're going to be slightly different in how they make investments in AI. So maybe they don't think that these big data center investments are the best use of capital in AI. I think most of them still want to be AI focused, but this is a company, you know, that Microsoft is very close to OpenAI, although there have been questions about how close in recent times. But to see something like this, I think it does call into question perhaps that the winners in AI so far, at least on the infrastructure side, may not continue to have the same sort of strength.
Yeah. Marty, CTO, any final thoughts?
I think there's trouble in the OpenAI organization. It's been very clear. Musk has identified it. I think it's unraveling, and this is just the cream on top of the surface. This is how it manifests.
And nobody trusts Altman. CTO, any technology thoughts? AI, data centers?
I mean, AI and data centers are not going anywhere. I mean, every single day I'm sitting here at my desk and I keep getting impressed how good AI is and how much better it's gotten just over the past 6 months, it's incredible. It's incredible. You take any discipline, medical matters, like your daughter is sick, you can go and check and you get better, more accurate answers than the doctor. And it's incredible. And the value that's coming out of this with the speed for like software or any discipline, it's going to change the world so much in different ways. Good or bad is for another discussion, but it's going to have massive impact. And the value of the slightly better AI is enormous.
CTO, will we be here in 2 years, or will we be replaced with avatars?
Yeah, I think that some personality will remain because people like people and so on and so forth, for our flaws and all our paranoia and issues and so on and so forth. It would be more boring if we were perfect, probably. So my bet is that we will still be here mostly for our mistakes.
Brilliant perspective.
Well, I mean, I think the biggest news before we leave, guys, is NASDAQ Rule 5712. I don't know if you're aware of this, but I had Matthew Siegel on my space last week, and we went over this in detail. Everyone must understand that all of the NASDAQ trading of crypto-backed baskets through the ETF structures has been under previous NASDAQ rules 5710, 5711, which has all been sort of mutations of the rules to fit these new assets. Well, the NASDAQ came out with Rule 5712, a digital asset-specific investment vehicle designed to hold digital securities by limited liability companies. This is going to open up the floodgate for the NASDAQ to compete as a crypto exchange. And you're going to see thousands of these applications coming through. Literally the day after they launched it, the Hashtags Crypto Index went live, which has a basket of cryptos, some of which, this has got Solana, Link, XRP in there. You have no idea. And this goes right under the radar of all this bullshit. This is the biggest change from last week.
I agree with that. Actually, just got some breaking news that Amazon's stake now in Anthropic has a value of $14 billion. So while Microsoft is retreating, Amazon is a bit late to the party. Now they're going full hog. So CTO, you're right on that one. Mando, any final wrapping thoughts? And once again, thank you to the moderators in the chat. Thank you to everybody in all the different channels. Links below for this team here. You probably follow us all anyway. So just sharing that. Final thoughts from Mr. Mando.
Yeah, I guess I haven't given a pep talk every single week, but it does feel as though it's been a very, very tough month to be in crypto. I would agree with what you guys both said at the start. Like it's tough to hear it, but this is the sort of time where you have to hold through the volatility, and these can be some of the best opportunities to buy coming out of these sort of periods. It's been very frustrating, I think, because like I said, Bitcoin hasn't been acting like the rest of crypto, and you could have been down very, very bad. So looking at Bitcoin here, but I do think we're starting to come towards a very, very attractive risk reward level for things like Solana and some of the other L1s out there, which I think could break out. Maybe not next month, but it's tough to imagine that Solana is like going to go down another 50% here. Like it's just down 50%. It's down to 150. It's retraced the whole of the Trump pump, and the unlocks are going to be finished in a month. ETFs coming. Kind of feels like one of the best trades now for the rest of the year.
I've been DCAing in full disclosure. So, and the other crazy thing is stablecoins continue to mint, which is fuel for the fire. So we just have to wait for the lid to come off from the market maker manipulation and we go higher. But we do need a catalyst for that to happen, or some type of breath of fresh air, or some big state locking in, or some sovereign trying to front run the US. It's all coming. I don't believe 2025 is dead yet. I think there will, and remember, everything happens in 10 or 15 days a year. It's not a gradual up or down. When things fall, they fall fast. When things go up, they go up fast. So that's a wrap, everybody. I want to thank you all so much. Hang in there. Next week, we'll be back. Thank you, everybody, for coming. Don't forget, follow everybody. Thank you, CTO. Thank you, Mando. Thank you, Marty. Be good, everybody.
Thanks, guys. Thanks, CTO, Mando, and James for having me. Yeah, interesting week. Don't get shaken up, people. I know it's hard. Accumulate the lows. It's all coming. Yep. Be patient.
Okay. Bye, everyone.
Let's go.
Bye, guys.